Hey, this is Thomas. Today, I want to talk about something that I want to share a long time ago, but I wasn't sure how it will be received. But hey, I think this will be an interesting topic, so here it goes. I want to talk about the good, the bad, and the ugly of Primerica. In this video, I will go over the product Primerica offers, the company structure, and the compensation that agent receives. And lastly, to answer the ultimate question, is it worth it working at Primerica, or is it really just a scam? Now, what makes me qualified to talk about this? Well, for those who don't know, back in my early careers, I actually worked at Primerica for 2 years. At the time, I was working 3 jobs. I didn't know anything about taxes, money, or investment. I was doing everything through the bank but was not satisfied with the service or advice. I knew I had to educate myself. So I started to learn so that I could become smarter about money and help my family make sound financial decisions. And through a friend's recommendation, I joined Primerica. So first thing first, what is Primerica? Primerica is an insurance company that provides investment, insurance, and financial services. Unlike another company, WFG, which is a brokerage firm, meaning they don't have the in-house product, Primerica only offers the insurance products. They have been around for over 40 years, and since 2010, Primerica has been publicly traded on the New York Stock Exchange. And back then, when I joined, they said that even the Canada Pension Plan is investing in their company, and I checked it today, and it's true. Since 2013, the CPP Investment Board had Primerica shares in their portfolio until they sold all of them in 2020. And for insurance products, Primerica only offers term insurance, which means you're covered for a certain period of time. On the investment side, they mainly provide mutual funds. They collaborate with well-known investment companies like AGF, Fidelity, Mackenzie Investment, and others. Their core value is buy term and invest the difference. You might have heard this phrase a lot from people like Dave Ramsey or others, but it actually was first used by Primerica's founder, Arthur William Jr. The company believes for the amount of money you invested in any permanent life insurance, you can buy the term insurance to get the basic cover and invested the rest in the stock market, so by the time that you're retired, you already have enough saved instead of letting the insurance money take your money. That's pretty much the background of the company. So let's talk about the good, bad, and the ugly. But hey, before we continue, a disclaimer first. Because it has been more than 10 years ago since I worked there and some information could be outdated. So if any of this information is incorrect, feel free to comment below. Lastly, this is just my personal experience with the company. Others may have had different experience. Let's talk about the good side first. It's very simple. First of all, with term insurance, there aren't a lot of moving parts. The insurance company provides a coverage in exchange for your money. There's no additional saving inside the insurance policy. It's pure coverage until a certain age. For the investment side, it's really similar to what the banks offer as well. Your investment goes up and down with the market. Now, for their training program, I personally think Primerica offers a very good structure and environment, at least in the branch that I joined. In order to become a life insurance agent, you must first complete a course called LLQP, which stands for Life License Qualification Program, and Primerica gives you full support in helping you with the course. In fact, back then, they will offer free tutoring class to speedrun each chapter, and they have experienced teachers to answer all your questions. This is compared to other agencies where you might need to do this at your own expense. And once you complete the courses, you also have to obtain an error and omission insurance. This is standard in the industry just in case you get sued. And this insurance will pay for your damage. E&O insurance ranges from $700 to $1,000 per year depending on your years in the industry and products that you'll provide. And for Primerica, I remember it's around $300 to $400 per year, so almost half the price. I believe it's because they only offer term insurance where there's much less chance for being sued. And the other thing that I like about Primerica is their simple yet very effective financial concepts, like How do you explain the difference between RSP and tax-free saving? How do we explain how much we need for retirement in 3 sentences? And even today, I still use these concepts and presentation to help my clients. And the last thing that I like about Primerica is very flexible. Before I joined Primerica, I tried to join different companies or agencies but failed. They neither want advisors with tons of industry experience or they want full-time advisors. But on the other hand, Primerica allow advisors to work part-time and pretty much they welcome people with no experience. Now, I know being too flexible is not always a good idea neither, which I talk about it later. But hey, at least I got in and got to improve my money knowledge. Alright, let's talk about the bad side about Primerica then. First is the price competitiveness. Because Primerica only focus on term insurance product, you might think, oh then it must be very cheap. Well, which is not the case. Let's say I'm a 30-year-old male, non-smoker, and I want to buy a $1 million coverage for the next 20 years. With Primerica, it's roughly $65 per month, where the other major insurance companies like Canada Life or Manulife is around $55. That's almost 15% price difference while providing the same features. And the older you get, the bigger the price gap between Primerica and the other companies. Primerica agent might say, oh, because we have a terminal illness rider that is included already. Meaning, if you are diagnosed with a terminal illness, you get 40% of the death benefit payout first. But based on what I remember, we have to be diagnosed with less than 6 months to live to qualify for that. The second will be the product competitiveness. They can only offer term insurance, and there are 2 problems with this. One being, the term insurance product in Primerica is a one-way product. You cannot convert it into any permanent coverage because there isn't one available. And back in my days, there's no living benefits like disability or critical illness, so what happens if someone is sick but not dead yet? And second is their philosophy of buy term and invest the difference isn't necessarily a bad one in a perfect world. But what if the client needs coverage after they turn 65 because they may still need to have a mortgage or other debts? Or what if the client wants to leave a legacy to the kids tax-free? Or what if you want to find other tax shelter buckets because you maximize your tax-free saving and RSP already? Or business owners who wants to have a corporate-owned insurance with a saving feature so they can invest their retaining income with tax optimization. And unfortunately, term insurance won't help you with any of those scenarios. Lastly, we need to talk about the branding. Client has to trust you and your company before they want to purchase insurance from you. And because Primerica tends to have a negative reputation, which I talk about it later, as an advisor, you often start the battle with a disadvantage. Back then, even people who wants to buy insurance after they heard the word Primerica, they back off. And especially nowadays, people can literally Google everything. And guess what will show up when you type the word Primerica? Now I have to say there are lots of good advisors in Primerica, but I believe they have to put extra amount of time and work to convincing client to go with them. Okay, and now I know you have been waiting for this, the ugly part and also the reason I decided to leave Primerica. First is about the recruitment. Pretty much the first day that I joined, the manager told me I have 3 things to sell: insurance, investment, and recruitment. We were told to recruit anybody. The reason recruiting people under your team was so popular was because once they close a deal, you get a cut too. So the more people you recruit, the more passive income that you have. Now, personally, I'm not against the concept, and I do have a team of advisors too. Because like McDonald's or Starbucks was using a franchising model, recruitment is the way to expand, but you need to do it the right way. What I don't like about Primerica's recruitment model is there's no qualification. As long as you live and breathe, pretty much anyone can join the company and let the system filter. Neither you work as an engineer or work in the subway, you can join Primerica, which makes for a lot of unqualified agents who think they can make a huge amount of money in a small amount of time. Sure, the first year might be okay because you will have your family and friends to support you. But because of the price and product competitiveness, all the things that I mentioned above, Primerica lost the edge over its competition, and therefore the second year is a lot tougher to close business, and by the end, they start to fail and start calling the company a scam. But Primerica as a company, in my opinion, doesn't really care. As long as there are more people joining than people leaving, they will be profitable. And back in the days when I joined, I have to pay $100 as an admin fee to process my application, which I kind of find it weird. Then after I got my license, I have to pay $30 a month in order to use their online tools. I felt like I joined a gym membership which I never use. I wonder if this is still the case now. Can anyone tell me if this is still true? Please let me know in the comment below. Second is the compensation, and that's something I didn't know until I left Primerica. Because Primerica is 100% commission, you only get paid on what you close, and how you get compensated depends on which level you're in. Back in my days, there were 5 levels. For the entry level, you get a super low percentage of the commission neither on the insurance or the investment side with Primerica. As you level up, the percentage gets higher and higher. There are a couple reasons they set up like that. Let's say if you're in level 3 and you have a new advisor who is in level 1, then you get the difference between as your override bonus. Therefore, you want to level up as fast as possible in Primerica because you don't get compensated well in level 1. And on the other hand, for lots of insurance company or brokerage firms, the compensation is already 2 times or even 3 times even if you are in level 1 as well. So it makes a huge difference. Also, one of the biggest problems was how the promotion worked. In order to get promoted in Primerica, it depends on how many people you recruited. That's right, it's not based on how many clients you help or how much business you brought to the company. I remember in order to be promoted to level 2, you need to recruit 3 level 1s. And if you want to get promoted to level 3, you need to recruit 9 people to your team. And for level 4 and level 5, you need to hit both the production and number of recruitments in your team. And the worst part, there was a deadline of 2 years to fulfill your quota. Otherwise, you have to completely restart. So what I saw was a lot of unqualified advisors recruit their parents, their kids, and their friends to get promoted. Some of the so-called senior advisors never helped a single client. And because I focused on helping clients and only wanted to bring good advisors to the team, at the end, I was still only a level 1 for the 2 years I was there. The other thing that I didn't like was the environment. Even though the people I worked with were super nice and super helpful, I felt they were a little bit too biased. They always say whole life insurance was bad, universal life was evil, and that people got deceived by the big insurance companies. But when I studied further, I realized a lot of healthy or money smart people use permanent life insurance to protect their wealth. And the further that I study, the more features that I discovered that term insurance cannot cover. I tried to ask my Primerica colleagues about this, but no one would give me a logical answer. Because they can only receive one-way training and no products to compare. Also, every time when they compare the downside of permanent insurance, I realized they were using 20 or 30 years old permanent life insurance product where there was way more flexibility and more features in the plan right now. The other thing is that 90% of Primerica advisors has other jobs as well and could not commit fully to the industry. This was simply because they didn't make enough money due to the structure. Not only did it mean that they cannot provide the same service compared to someone who can work in the industry full time, but also the turnover rate was so high, which leaves a very negative image to the client. Alright, in conclusion, I will say Primerica is just like a university. It has a lot of good concepts and it helps young and experienced advisors to sharpen their knowledge and skills. However, just like university, a lot of times what we learned there didn't always apply to the real world. And as mentioned, Primerica only has limited products and they don't have the best rates. Not only that, the commission of the sales is lower that it cannot be sustained, which forces a lot of agents to work at other jobs. So you either have to do a lot of business or you need to start recruiting tons of people. Neither way, it doesn't have a good long-term impact on your career. Therefore, to answer the ultimate question, is it worth it working at Primerica? I will say I will not regret that I joined Primerica. In fact, I'm glad that I did in my beginning of my career, so I was able to learn and get a foundation of knowledge. and it definitely helped to become the advisor I am today. However, can I have the same achievement if I stay on? I'm sure the answer is obvious given all the reasons above. Alright, that's what I have for today. But hey, I really want to know what's your take on it, especially if you're still in Primerica as an advisor or as a client. Let me know in the bottom below. This is Thomas, and I will see you in the next video.